Hello.
Can you hear me the sound?
Can.
Can. Okay. Let me admit them. All right. All right. So I've already started revising. A little bit of the topics still uncovered, but they're all minor areas. I'll cover it through questions. Don't worry. We have time. So can you now take a look at this question? Meanwhile, I'm admitting, right? Just read the question number 1. I put there small questions, short by short, with answers and so on. So you're only reading, then we will discuss. Okay, read the following were deductible. Let me see anyone there. Just admit them, and then we can start. Okay, all there. Okay, read the question. Okay. Okay. Right now, the following were deducted. Once again, sound check. Can you say hello to me?
Hello, sir.
Good. Thank you. The following were deducted in arriving at net profit of 300. Last week I did company taxation. Very long question, correct? The very long question is the format that you expect in the exam. The very long question, you get the same format in the exam. Okay? The long ones. Okay? This one, short ones to see some tricks in the question. I'm putting it in a short form so that you understand the tricks of that questions in a. So today I'm revising all the topics, simple ones. Instead of saying simple ones, the complications inside the question. So that way easier for you. Understand? So the following were deducted in arriving at net profit of 300. So you got a net profit of 300. You have a net profit of 300. And you have this 300. The following were deducted in arriving at the profit. So to get the profit, you deducted already this entertainment expenditure. I just want to know whether you understand still entertainment or you forgotten. What is the rule for entertainment? The rule for entertainment, the rule for entertainment is, if you entertain customer, remember that, entertain customer, always allow. Customer always we allow in full. So here, can you see whether there is any entertainment relating to customer first? You can see that word, the entertaining customer. Entertaining customer you have there. You have entertaining customer over there. Wait. You can see entertaining customer over there. Okay. If you entertain customer, always when you entertain customer, we give 100% allowance. That means you can deduct 100%. Now here you have many entertainment, general entertainment expenses, lucky draw prizes given to customers. cash contribution to annual dinner. There are so many things there. So I want to know which entertainment allowed. So you must remember any entertainment relating to customer or staff. We must take a look at this. So I just put it here. Entertaining. If you entertain staff, always 100% allowed. Yeah, make note. If you entertain staff, always 100% allowed. Staff, keyword is staff. If you entertain customer, if you entertain supplier, we only allow 50. All right. So we want to know for what purpose. Entertaining staff, 100% allowed. Entertaining customer, supplier, only 50% allowed. If the entertainment is to boost sales, anything to boost sales, we also allow 100%. So the key things you have to look at it here. I think we don't want to admit anymore, otherwise I keep admitting until 8:30. Okay, right now. I always give 10 minutes allowance to start unless internet problem cannot do anything. And then too late, then I can't start the class. Okay. Now, if any students, existing students, your internet is cut, please tell me. Yeah. Okay. Now, entertaining staff, you look at the keyword, entertaining staff, allow. Entertaining customer, supplier, allow 50%. If your entertainment cost is incurred to boost sale, to boost sale, this is the keyword. Or where the word is saying such a way, or they didn't use the word boost, but you can see it from the question, it is to boost sale, 100% we allow. Okay. Now here we'll take a look at this. General entertainment. General means these are all for business, must be for business. They are all business. General entertainment expenses. So this is general entertainment cost. General means overall. Still we allow only 50%. Okay. You can see staff 100, to boost sale 100. Otherwise it is 50%. It must be for business. If it is private, cannot. Let's say entertaining, nothing to do business. If private, that means you spend money on your family, you spend money on your friend, they got nothing to do with business. If private entertainment, this one cannot. Cannot means nothing allowed, zero. We don't allow anything. Not allowed. Okay, zero. So the word like that means allow. Okay, right, allow how much? So now, general, I put the answer already for you. General, we only allow half. That means half at back. Lucky draw prices given to customer. I come there in a minute. What is this lucky draw? I said customer, 50%. But here, you are not purely entertaining the customer. You are giving lucky draw prices. What is lucky draw? Lucky draw is to attract customers. Lucky draw is to boost sales. Therefore, you allow. So you can add one more there. Lucky draw. Okay. Lucky draw. We allow 100%. All right. Okay, we admit the last candidate. That's it. Finish. Other candidate, let's them come back next class. Okay, now we look. Can you see here? 100%. This one half. Entertaining general. Lucky draw is to boost sales. You must understand that. Why we give lucky draw? Lucky draw is to boost sales. Of course, lucky draw prices we give to customer. That you know clearly this is to boost sales. If they didn't use lucky draw, They just simply say entertain customer. That entertain customer, you could have taken them to the restaurant, just bought for them some food. That one is, you are doing it specifically to the customer, all right, to get goodwill. That one still we give 50%. These lucky prices means customers, to all the customers. My question is, did you take all the customers to the restaurant to entertain? No, you only take selected. Therefore, we give half, only 50% if you take that selected customers. Lucky draw is given to all the customers who come in. You go to the supermarket, you can see that they have lucky draw. Whoever coming in today, you buy, you put the receipt, you have lucky draw. So something like that. This is to boost sales, so 100% allowed. Cash contribution to annual dinner. This is look like private. This is cash contribution to annual dinner. Customer organizing a dinner, asking you to contribute. This is private affair. Even though the name is customer, the transaction is in isolation. Cannot. So what to do? So you start with your net profit 300. You can see that. Then you add back general expenses, general entertainment. This is non-deductible expense. All these are under the heading of entertainment. General expenses disallowed. You see, they all under question gave you entertainment. You can see it here. You can see it here. They're all under entertainment. Okay, general entertainment expenditure disallow half. Lucky draw to boost sales, so you allow in full, but still you say they're nil. Annual dinner, this is non-business. Even though you are sponsoring a customer's annual dinner, that one is in isolation. So that is private. So that one cannot be add back. So that means how many items we had? 1, 2, 3, 4. You have seen how I'm doing it. This is your business income. Be careful. So I'm talking to you about entertainment. Now I've covered everything on entertainment. You see here, entertainment, business, allow. Okay, the word here. Okay, so of course, all these are business. Staff is business. This is customer, supplier, all right? This is customer, supplier. Customer, supplier. Right? Boost sales, general expense, general entertaining. This one is general, not general expenses. General entertainment expenses. Make note. If entertainment is private entertaining cannot, that means entertaining a family member or customer in isolation. Okay. What is customer in isolation? That means the customer is your customer, but you're only entertaining one's customer in isolation. You are giving money for the annual dinner. The annual dinner got nothing to do with us. So cannot. Okay, done. So this is your business income. Okay. Right. We're going to do some multi-area today. Okay, the following were deducted in arriving at this. Okay. Now, this question is, the question wants you to compute business profit. That means for we start with something and then we end up with for a. Okay, look at this one. The following were deducted in arriving at net profit. Same thing, same exactly like before, but this time compute deductible expenses. Just now I want to know what is the profit. Here I want to know compute deductible expense. How much will you deduct in the income statement? This one is the question is, requirement is different. How much will you deduct? Now deduct is this one. From 80, I can only deduct tax deductible 40. Here, lucky draw to boost general entertainment half. Lucky draw is to boost sales, allow in full. Cash contribution to annual dinner tabule. So deductible amount in the income statement is 70. That means what is non-deductible? 80 minus 40 non-deductible. Here, everything is deductible. Nothing there is non-deductible. Here, you cannot deduct anything for cash contribution to dinner because cash contribution to customers' dinner is in isolation, cannot. Therefore, we would not deduct that. Okay, non-deductible. So this deductible, this is non-deductible. So the question here is asking a different thing. Here we're asking you to calculate your 4A. Be careful. Right, next, exercise 3. Okay, exercise 3, good one. So read the question. Before you read the question, I hope you have understood. This one is you asked to calculate installment amount repaid, QPE, capital allowances. All right, capital allowances for car. Here you are buying a car. What is the rule for car? Capital allowances for car. If you buy the car below 100 exact cost, if you buy the car more than 100, but below 150, then the maximum will be 100. On the other hand, if you buy the car more than 150, your QPE, remember we are working out QPE. QPE will be more than 150, car will be 50. Note another point. When your car is 50, if you buy cash, you only take more than 150. If you buy for cash, we take 50 as QPE. If you are buying it on hire purchase, the moment you make payment up to that point, stop. So let's say like every year you are paying 20. Next year 20 is 40. Next year 20 becomes 60. You only take 10. 20 plus 10 is 50. Stop. Any payment beyond that, we don't accept for tax purposes because your IAAA is based on maximum 50, based on the total pay. Similarly, if I rent this, instead of buying, if I rent, that's the same figure will appear as rental cost. Beyond that, we don't want. So here, you are buying a car for 260. 260 is more than 150. So maximum you give only 50 if you pay. Now here the rule says if you buy 260, if you buy cost of car, if you buy cash 260, if you buy it for hire purchase 360, that means they're charging you 100,000 interest. You can see clearly. Now how they're going to pay? They're going to pay installment over 10 years. Now they installment 10 years, but before you pay the installment, you need to pay a deposit of 20. And your installment in YA21 is 6 months. So this year you pay 6 months. Maybe you started in July to December, 6 months. If you want, I can give the date, July to December, 6 months. From next year, January, December, 12 months. They don't tell you, we assume your year end is 6 months. Got it? The year end is December. Okay, question clearly told you this year you're only paying 6 months. So next year you pay the full month. All right. So, or if you want, I can put there, if you want, to make it easier for you, year end is December. Okay. Installment paid in YA21, you can put there from July 21. So maybe easier for you to understand. Okay, July 21. July to December, you can see it here. That will give you 6 months. I didn't put this in the question. You can insert that if you want. Yeah, insert. They don't tell you, hello, they don't tell you, you will assume year end is December. So that is your December. Here question tells you 6 months. That means they must be paying it from July. Understand? They are paying it from July. Okay? Okay. Calculate installment amount repaid. QPE. Yes? Installment amount repaid, QPE, capital allowances 2021. Okay. Now let's see what is your installment repaid first. All right. Installment repaid. Installment repaid. Okay. Your first payment is 20. Workers. Okay. Okay. First you pay a deposit of 20. Are you with me with that? Okay. Now, we always take the cash price, 260. You minus the deposit, how much you owe them. Because remember, capital allowances is based on capital repaid, exclude interest. Very important. So if you take the cash price or cost price minus the deposit, this is what you owe them. You owe them 240. And you are paying that for over how long? You're going to pay that over 10 months, 10 years. That means every month you'll pay 2,000 times by 6. So that means you'll pay 12,000. This is your capital repaid. Capital repaid. We don't want interest. We always exclude interest. Maximum is 50. Okay. Exclude interest. We don't want. We always exclude interest. So if you exclude interest, that will be a figure. Okay, capital repaid. So you pay deposit, then you pay capital. That means this is the amount paid. Amount repaid. They, of course, installment amount repaid, we want only capital. Exam question won't tell you capital. You should know that is capital. They're not going to tell you. You should know it is capital only. Wow. You are revising. So you have altogether 32, correct? Right. This is YA21. YA21. So just have a look. Okay. Capital repaid. So the amount is 32. Now next year, of course, this year you paid 6 months, correct? Next year you'll pay how much? You pay 12 months. 12 times 2, 24. Now if I add 24, that is beyond 50. See, at any point, your maximum payment cannot exceed 50. So in 2022, if I want the total paid, this is your maximum, total paid 50. So I can only take 50 minus this, I can only accept 18. From the 24, I can only accept 18. So what that tells you? What that tells you? That tells you that 32 plus, I know you paid 24, I accept only 18. 50 finish. Now let's see how to work out your capital allowances. Okay, capital allowances. Okay, first year, this is year 1. First year, you already paid 32, correct, over here. So whenever you pay first year, this is year 1. You paid already 32, right? 32 you paid already, right? 32. So IA 20%, AA 20%, altogether 12.8. Residual expenditure. All right. Now 19.2. Calculate installments. Okay. All right. So first year, hello, first year, you see, first year, YA 21, IAAA, car is 2020 on the amount paid. That's it, capital allowances. All right. Now we are moving into YA 22. Again, you calculate the amount paid, QPE, and your capital allowances. Now here, this is your figure, which I continue. Now this year, I know you're going to pay 24, but I told you we'll only accept how many? Remember, I already told you we only accept 18. This is year 2. We only accept 18 to make up 50. So this 18, I'll put it here. That's all we accept. The installment that you have accepted, any installment you pay in the current year, the accepted figure, you claim IA. IA on the payment made. Next, you have AA. AA is on the total paid. Total cannot exceed 50. That's it. So altogether, 13,600. So that is your carried forward figure. Ada soalan? Boleh tanya. Okay. Now, I want you to do year 23. Don't look at the answer lah. Take the paper, try 23. Now, note the point. From now, you don't take any payment. You don't accept any more payment. Why? Already 50. Even you pay, of course, in practice, you pay. In tax, I don't want the figure because already exceeded 50. Even you pay, I only take the 50. So calculate installment paid. Allowable installment. Allowable installment, nothing. QPE, whatever you have paid, max. So how do you work out? So that figure will continue here. That figure will continue there. Installment, QPE, 23, that's a figure. Now this is year 3. Remember, this is year 3. Okay, year 3, you're going to pay so much. This is your installment paid. Even though you pay that much, but we're not going to accept the figure because we're going to ignore this amount since your year 1 and year 2 payment exceeded 50. No repayment above limit accepted. So since you don't accept any payment, no IA. IA only if you accept payment because your limit is already from last year 50. Once 50, we don't accept any payment for car. If it is commercial vehicle, can lorry, van, tractor, bulldozer, not for car. Nothing. So AA 20%. Answer. So you only have AA. From year 3, You always, from year 3, you'll only have 20, 20, 20, 20, nothing else. Okay. So I can give you an easy way to do. Alternatively, I can do it like this. You pay 20 and 12, 32. The moment you pay, I give IA and AA. Next year, you pay 12 times 2, 24, but I only take 18. Why? Because my total paid, the total payment, I don't want it to be more than 32. I only accept 18 to make up 15. So even though you paid 24, I'll only accept this. I only accept this figure. So if you accept that, total already 50. Now IA is on the initial payment, 32. Initial payment. Even though this year you paid 24, we only accept this. Payment accepted, IA. AA is on the total. This year, you paid 24, but we ignore. Why we ignore? Because you already achieved maximum last year. So this year, we don't accept anything. So this year, I don't accept any payment. If you don't accept any payment, no more IA. But AA will continue on the last total you have already paid. The last total is 50, max, stop. So from 22 onwards, you only calculate AA on this figure until you sell the asset. Okay. So now easier, IA, AA, IA 20%, AA. Here no more IA because we don't accept payment. AA 20% on the total paid. So this is your capital allowances for the years given, which will be exactly the same way which we did in the previous exercise. And you see here, all these exercises I've done. You can see 6,004, 12,8. You can see number 1 here, which is this one. Another way of doing it. Year 22, you can see 13,6. You can see it here. The last year, you see, I worked out 10,000. 10,000. Got it? Right. See whether you have any problem there before we move to the next one. Students, are you there? Can you hear me? Are you following?
Yes, sir.
Don't know means please ask. This one I'm revising. I've already done all these last time. So I'm taking a smaller portion of the question and revising. Okay, now I give you one more difficult one. Okay, you read this one, take the paper, make mistake, try before I explain. Okay, boleh. Okay, try this. I've also explained to you by giving a diagram. See whether it makes sense to you. And I want you to try this without my help. Okay, I've given you some information in the diagram that will give it to you. But before you read the question, before you read this question, capital allowances given to owner. Capital allowances is given to only owner who uses the asset in his business. 1 point. Point number 2, if I buy If I give it to my group member subsidiary to use it, only subsidiary can claim. You cannot claim. If you bought the asset, you must use it in your business. Okay. If you allow the subsidiary or group member to use it, only group member can claim, not you. Okay. You cannot claim capital allowances of the group against yours. They claim against theirs. All right. Now you read. Right. If you buy, hello, I give you one hint. If you buy 10 machine, if you buy, I can only claim if you start using it. So the moment you buy and you start using, I can claim IA. Let's say end of the year, you only use 8 machine. So AA only can be claimed. So IA is given if you buy and use it. AA is given only if you are using it at the year end. If you are not using it at the end, AA. All right. So I just want you to try this question. See whether you can do it. That's all. I've given you the diagram. Please read, understand the diagram. 3 minutes, and I'll talk to you. Sorry, student. Okay. Okay, this one. Once again, sorry. Wait, Okay, 6 January 21, J acquired 5 printing machines. You can see here he bought 5. Okay, year ended is June. JK acquired 5 printing machines at 120,000 each. 5, 120 each. 4 machines were installed and used during the year. So out of these 5, 4 machines installed and used during the year. So this one is used during the year. Used during the year. Okay. For installed and used during the year. But at year end, only 3 were used. Year end, so out of these 4, so the moment you use it, the moment you buy and use it, you can claim IA. At the year end, 3 machines were used. If you are using at the year end, you can claim AA. That means 1 machine not used. That means no AA. And the 5th machine was used by the group member, this one group, not a owner, group. So you don't get IAA. So now, out of that 480, you can claim 20%. IA always 20%. Done. AA is 14. General plant and machinery 14. 14 I give only on the assets being used. If you use it at the end, you claim AA. So AA is so much. So together, you can claim capital allowances 146.4. This is your expenditure. Carried forward. Finish. Done. That's it. Carried forward. Finish. Now, any question? It's a bit complicated exercise. Hello, students? Students, any question?
Yes, sir. No.
Hello, sir.
Okay, can you understand?
Can.
Yes, sir.
Okay, okay. Now look at this. Look at this. Look at SST. Bacha sola. Apudi kata. SST, what do you understand? Export, no sales tax. Import, yes, there will be sales tax. Export, no. Import, yes. Okay, so you should know that. So here, 1/3/21, you exported furniture 40 to overseas. Export, no. Send furniture to Kuala Lumpur, yes. If you're selling within Malaysia, yes. Tioman, what about Tioman? Tioman, Langkawi, correct? They are this designated area, special area, designated area, no sales tax. Okay, let's see. Okay, let's see. Okay, 1st March, 30th April, bi-monthly period. Bi-monthly period, January, February, 1 January, February, then March, April, May, June, July, August, every 2 months. So this is your taxable period. You exported, sales tax, export, nothing. Tioman, special area, nothing. KL, yes, 10%. So that means your sales tax is 10,000. When will you pay? You will pay within 1 month from the end of the taxable period, 2 + 1. Due date, 1 month after the end of the taxable period. After the end of the taxable period. All right, 1 month after the end of the taxable period. So 1 month is here. Habis, itu saja. Okay, itu saja. Now, look at one more. Now, so far, if your year end falls on an even date, this one, a new rule I'm teaching you. If your date falls on an even date, that is 2, 4, 6, 8, 10, 12. Let's say this is your year end. Let's say this is your year end and that is even number, and you have registered for SST, let's say on January 21. Okay, January 21. Your year end is here. This one, your year end is November. This is odd. Okay, you registered also on 1/1/21. State the bi-monthly period. Okay, only this one. Bi-monthly period, watch. This is your even. Even number is here. Now you registered for your SST on 1/1. So that means 1/1 up to 28, 2 months, 2 + 1. Again, after that, 2 + 1, 2 + 1, 2 months, next month pay. 2 months, next month pay, 2 months, next month pay. So this is 2 + 1, finish. Now, that is if your year end falls on a even number. This rule I didn't teach you, now only I'm going to tackle through the question. If your year end is odd, you registered here. Now, if your year end is odd, instead of taking 2 + 1, you take 1 + 1. That is only for the first period. First period only you take 1 + 1. After that, sambung with 2 + 1. That's all. So here, November is odd. Odd means, of course, odd, but doesn't matter. You go and see when you registered. You registered here. So first you take 1 month. Odd is 1. 1 + 1. After that, the next period here. After that, sambung lah. 2 + 1. Only the first period, 1 + 1. After that, sambung. 2 + 1. 2 + 1. 2 + 1. The rest are all 2 + 1. Finish. That's the only difference. So, exam, we don't ask you odd. We only ask you even. So, even you can't remember this rule, that's fine. Even you can't remember this rule, don't worry. Because exam, we only ask you even number. We don't ask you odd number. Okay, so exam, you just take 2 + 1, don't worry. This is even. All right. So no need to worry on that. So that is your next period. Okay. Again, October. This is your year end. This year end tells me you are in the even. Then go and see when you registered. You registered there, first 2 months, 2 plus 1. 2 plus 1, no problem. This one, look at your yen or go and see when you started. You registered there. Only the first time you take 1 plus 1. After that, the next day, you go for 2 plus 1, finish. Right? Exam, we only ask you this one. Or we don't ask. Even you ask, you know already the way to do. Okay? The exam, you always take 2 plus 1. Now look at withholding tax. Right. Okay, can you read that withholding tax? Okay, withholding tax. DIN, resident paid to non-resident, Japanese 100,000. DIN, paid to non-resident. DIN, paid to non-resident. Remember, when a resident pays to a non-resident, there is subject to be a withholding tax. Now, 100,000. Work performed, technical service in Malaysia, non-technical service in Korea, 60 days altogether, you paid 100. Compute WHT. We only charge WHT if you perform the duty in Malaysia, except commission paid. Commission paid to undertake any job, commission paid to do something, commission paid to sell a land, commission paid to get some business, commission, that one worldwide. Otherwise, performance of job, where withholding tax is paid in performing a duty, that one only in Malaysia subject to withholding tax. Not this one. But you paid already 100 for 60 days. We only charge you withholding tax for 40 days. WHT is imposed on work performed in Malaysia. 60 days, you paid so much. How much for 40? That is this much. On that, I will charge you withholding tax, 10%, which is, you can see here, 66667. Finito. Okay, that's the figure. 6667, withholding tax. When will you pay withholding tax? Within 1 month. Okay, finito. Now, this is your very important topic for your exam. RPGT, right. So RPGT, you must know my format. Otherwise, you can't do it. Okay, read the question. RPGT. Read very carefully. RPGT, you must remember my format. You can't remember the format, you cannot do. Right, let me revise the format. How is the format? Okay, format is like this. Okay, what is your format? Format, remember, I give you disposal consideration. Next, minus incidental cost of sale. For example, What is incidental cost of sale? Incidental cost of sale will be legal fee to sell, land and building, stamp duty, valuation fee, okay, brokerage cost, commission, brokerage, okay, advertisement to sell, anything relating to sell. If you don't know the format, you cannot do 1, 2, 3, 4, 5. This you minus. Next, you minus permitted expenditure. Permitted expenditure means like renovation, improvement to land and building, renovation. If you buy furniture, fixture, fitting, don't bring it here. Furniture, fixture, fitting is capital, but not improvement to building. We want improvement to land and building. Improvement to land and building. Got it? So this figure minus these two figures. Okay, done. You have 5 steps to go. 1, 2, 3. Then legal fee defending asset. Legal fee defending asset. Only the first one must be here. This one you can mix the order. This one, you can put it in whichever way you want. Whichever order, doesn't matter. Number 5. This is your disposal price. Number 5. Now the term is very important. This term, DP, DC, DP, abyss. So you have to follow the format to get the figures. If you know this format, you are done. Okay. If you know your format, you're done. Next, you go for acquisition consideration. Add incidental cost of purchase. You have similar items. Similar. That one is to sell. This one, incidental cost of sales and purchase is the same. This one is for selling. This one is for buying. So you have the same thing appearing again. The whole thing will reappear again. This one. The whole thing will reappear again. Okay, the whole thing will reappear again. But instead of saying sell, you will have legal fee to acquire, stamp duty to acquire, valuation fee on acquisition. Right? So this one is to acquire, advertisement to buy, brokerage costs. Maybe you paid commission to get the building, whatever. Remember, this is a cost. This is a cost. Cost and cost we add together. Then what we have? You minus recovery. Recovery can be compensation, deposit, forfeited. Deposit, forfeited. Okay, compensation. Don't forget all that. Again, you need 1, 2, 3, 4. This is your acquisition price. Number 5, you'll get your acquisition price. AP. Here, you start with AC, you'll end with AP. Got it? Then what else you have to know? So, this is your DP. Okay, DP. So DP, this is your AP. So DP minus your AP equal to gain. So you can minus this like this also can. From this figure, you can minus this figure to get that figure. Once you get your gain, you can minus schedule for exemption. Schedule for exemption is only given for individual, not for company, individual only. How do you take this? You take 10% of the gain or a 10,000 limit, whichever higher, and that will be your taxable gain. And you look at the table to pay your tax. Now come, let's do this question. Okay, first compute the cost to recipient. If you are selling to third party, selling to Sun will come later. This one selling to third party. Sold to third party. Okay, look here. ABC Sandran Bharat sold the factory. Okay, cost. So this is your acquisition consideration. Furnishing. Why furnishing we don't want? Because, but exam you put nil, don't put dash, put nil. Furnishing is a capital expenditure, not permitted expenditure. What is the meaning of permitted? Permitted means the value that will improve the value of a building. Furnishing, you put furnishing, you debit furniture and fixture and fitting. Don't debit building. Renovation, this is permitted expenditure. Cost to define title, yes, you minus this from disposal consideration. Legal fee to sell, minus from disposal consideration. These are all incidental cost of sale. Also incidental cost of sale. Stamp duty to buy, stamp duty to buy, you add to acquisition consideration. This one, buying, acquisition. This is incidental cost of purchase. Okay. This one, incidental cost of sale, incidental cost of purchase, buying and selling. Market value at date of sale. So market value at date of sale will represent your disposal consideration. That's it. Now we have to put it back into the solution. Look here. Disposal consideration. 600. Incidental costs of sale, this figure. Defending asset, cost to defend asset. All right, renovation is permitted expenditure. Then you can see you write that furnishing is capital, not a permitted. So exam, you don't put dash, exam, you put there nil. Okay, disposal price. Next, cost of acquisition, acquisition consideration. Cost of purchase, incidental cost of purchase, acquisition price. So you know this figure. Minus this figure, you'll get gain. Now, here who is selling? AB Sandre and Berhad. You must look at the name. You must see who is selling. This one is being sold by a company, AB Sandrian Berhad. Okay, AB Sandrian Berhad company. So this one is a company. Company selling, not applicable. Schedule 4, not applicable. So this is your gain. Exam, you no need to show this line. No need, no need. I'm just showing you the format. So this is your answer. Question wants you to work out chargeable gain. That's all. They didn't ask you to work out the tax. Only gain, habis. What about if we sell to Sun? Sold to Sun. Okay. Now, sale to connected person. Connected person will be husband, wife, children, grandchildren, grandparents. Okay. Husband, wife, children. Husband, wife, children, parents, grandchildren, grandparents, all that category. All right, this category here. Okay, sale to connected person. Seller, buy. Okay. No gain, no loss. We call it NG and L. Right. Connected person, seller and the buyer. Seller, buyer. No gain, no loss. Okay. Right. That means, what do you mean by no gain, no loss? No gain, no loss means, no gain, no loss means selling at cost price. Selling at cost price, i.e. cost to seller. It will include all costs, including permitted expenditure. Okay. Okay. Buyer. Buyer will buy at cost to seller. Let's say here is father, buyer is son. will buy at cost to seller, right? Son. Son will buy at cost to seller. The seller here is your father. Okay. So whatever the father spent, that is your buying cost. Father's buying price is your buying price. If father spent 10, he's selling it to you at 10. Selling at cost price, i.e. cost to seller. It will include all costs, including permitted expenditure. Son will buy at cost to seller, to father. So let's see what's the figure. Okay. So go and identify the okay. Whatever cost, acquisition cost, renovation, defending title, legal fees to sell. This one is for selling, he's not selling. So you won't have this figure. This is for selling, he's not selling. Buying, that's it. So all the ticks will be part of the cost to the father. Okay, recipient's cost. So if you are selling to third party, market value it sold to third party. If you are selling to son, cost to donor. So here, what is the cost to donor? Acquisition cost, permitted expenditure, incidental cost of purchase, cost to define asset, cost to, this is selling price to son. Selling price to son, cost to father, and that is cost to son, 295. Finish. Any question? So this is the selling price to son. Father will sell at no gain, no loss. So in our question, father's gain is 0. Son buys at 295. Next time when son sells, son selling price minus this figure. Next time when the son sells, son selling price minus 295. Habis. Boleh? All right. Next one. Okay. Wait, this one. All right. This one I will teach you separately. That I'll teach you separately because there is one new rule there. Okay. That I come back maybe tomorrow also can, no problem. Okay, look at this one, MTD, monthly tax deduction. Monthly tax deduction, Malay we call it potongan cukai bulanan. Potongan cukai bulanan. Okay, company must deduct PCB, monthly tax deduction, State the date when the monthly tax deduction of its employee due for payment in respect of company must deduct PCB. State the date when the monthly tax deduction of its employee due for payment. Okay. Okay, in respect of this one here, the April. In respect of April payment, in respect of July payment. Okay. Now, April 2020, you pay in 2021. That means 15 days from the end of the month. We only give you 15 days. If you potong cukai from your salary in July, you must pay the government within 15 days. There's one mistake. It's supposed to be 21. Can you change it? 21. Hello, there is a mistake here. This date is 2021, not 2020. Yeah. Can you change it for me? 2021. 2021. That means any money that you deduct in April, you pay in 15 days in May. If you deduct in July, August 15. If you deduct in December, by January 15, you must pay to the government. This is MTD rule. MTD, potongan cukai bulanan, due within 15 days from the end of the relevant month. Okay, relevant month. Habis. Boleh? All right, next question. Okay, next question. Okay. Okay, next question is here. Withholding tax and SST. All right. Let's talk about withholding tax and SST. Miao Berhad imported non-current asset into Malaysia, costing 100,000 and paid non-resident 10,000 to install the machine. Assume non-resident has no business in Malaysia. State the relevant tax for WHT and SST. Right, this is a very important topic, two together. Now, withholding tax, we only charge if you do work. Withholding tax is based on service rendered, not on asset that you buy. But sales tax, you pay on all the imports. Be careful. So, okay. Sales tax, WHT. Non-current asset acquired. Non-current asset imported. Non-current asset or goods. Goods imported. Sales tax 10%, yes. Withholding tax. Sales tax, yes. Withholding tax. no WHT, no WHT on imports, on import of non-current asset or goods. WHT imposed on services. WHT imposed on services rendered. In Malaysia. Okay. All these you need to take down. Huh? All these I've given you last time. I'm just revising. Okay, finish. So very important point. Okay. Payment within. Payment is 2 plus 1. Here payment within 1 month of paying or crediting the recipient. Be careful. So if you look at this question here, Miao imported non-current asset into Malaysia costing 100 and paid non-resident 10,000 to install the machine. Okay. Installation cost. Here not applicable. Installation cost. Resident paid to non-resident? Yes. 10%. Resident paid non-resident? Yes. 10%. Okay, look at the question. So you imported non-current asset into Malaysia costing 100 and paid non-resident 10,000 to install the machine. And the non-resident has no business presence. State the relevant taxes for WHT and SST. All right. SST is due within 1 month. 2 plus 1. You bought it here. You bought it here. bi-monthly. So 1/1 will end here. So you pay here within 1 month from the end of the bi-monthly period. I put there already, correct? 2 plus 1. Okay. So answer, non-current asset, no withholding tax. SST, sales tax at 10%. And you'll pay here. You'll pay on 31st March 21. Installation cost. Resident to non-resident, yes. Within 1 month of paying or crediting the non-resident by end of the month. Services offered by non-resident will be taxed at 6% only if non-resident is registered for service tax. Yes, if you're registered, he's not doing a business, not registered here. So if you want, I can put in the diagram. Service tax, 6%. Service tax. Service tax at 6% will be imposed on any services rendered by anyone. This one not necessary, you must be a resident. Service tax at 6% will be imposed on any services rendered by anyone in Malaysia, provided the service provider is registered for SST. Now, in this case, he is providing you a service. WHT is imposed on the service rendered in Malaysia. But that foreigner, the non-resident, imposed on services rendered in Malaysia by non-resident. But the non-resident if he is rendering you a service, the non-resident may not be registered for service tax. So if it's not registered for service tax, he won't charge you service tax. Service tax at 6% imposed on any services rendered by anyone in Malaysia, provided the service provider is registered for SST. So here you can see that services offered by non-resident will be taxed at 6% only if the non-resident is registered for service tax. Okay, last one. Mia Berhad imported non-current asset into Malaysia costing. Okay. Non-resident. Mia Berhad imported non-current asset into Malaysia costing 100 and paid non-resident 10,000 to install. Assume non-resident. Assume non-resident registered for SST. Okay. Answer, WHT. No WHT is imposed on non-current asset acquired. No WHT is imposed on payment made by resident to non-resident who has a business presence. If he suppose he has a business, no WHT. SST, all imported assets, goods will be subject to 10%. Okay, 10%. Okay. And Sales tax, whether or not registered for SST, all imported assets, goods will be subject to 10%. Sales tax, whether or not registered for SST. Therefore, Mia will pay 10%. Okay, done. Except installation services will be subject to 6% service tax. It is being offered by non-resident registered for service tax. Therefore, service tax will be 600. Okay, due date within 1 month of the date you provide the service. Taxable period within 1 month. That's it. End of story. Any question? Students, any question? Okay. Prepare tomorrow on your assignment. I'll also discuss the important figures that you need to put tomorrow. So you prepare and come. Okay. We'll stop here and then we'll continue. I also will make a little teaching on this one here. On this part here. I will also do some teaching on that part. This is your self-assessment. Company. I'll do this tomorrow. We'll look at it tomorrow. Today, that's all we do. Tomorrow we look at self-assessment. And partnership. Okay. Tomorrow I look at self-assessment a little bit, I clear. And partnership. Yeah. The rest I'll cover maybe next class. Okay. That's all for today. Thank you.
Thank you, sir.